In a world filled with financial opportunities, there's one question that more and more investors are asking themselves. What impact is my money really having? Imagine knowing that every dollar you invest doesn't just grow your wealth, but helps build a more sustainable, ethical future. Sounds too good to be true? Well, it's not. Welcome to the world of sustainable investing, where you can make your money work for both you and the planet. In this video, we'll dive deep into what sustainable investing is, why it matters, how to get started, and what you should look out for. Stick around. Your money is about to take on a whole new purpose. What is sustainable investing? Sustainable investing is the practice of making investment decisions based not only on financial returns, but also on environmental, social, and governance, ESG factors. ESG investing is a growing trend where investors are increasingly focusing on companies that align with their values, supporting industries that prioritize the planet, people, and ethical governance. Simply put, sustainable investing allows you to contribute to a future where your financial success can coexist with positive global change. The 3 pillars of sustainable investing. Sustainable investing is based on 3 core pillars: environmental, social, and governance. Let's take a closer look at each one. Environmental. This pillar considers how companies impact the planet. It looks at everything from carbon emissions to waste management and resource conservation. Investing in environmentally conscious companies ensures that your money is supporting businesses that prioritize the health of the earth and fight climate change. Social. The social aspect focuses on how companies treat their employees, customers, and communities. Do they provide fair wages? Are they committed to diversity and inclusion? Social responsibility also extends to how companies contribute to societal well-being, whether through charitable efforts or maintaining high ethical standards. Governance. Governance refers to the way a company is run. It focuses on transparency, executive pay, shareholder rights, and whether the company is following ethical business practices. Good governance ensures that the companies you invest in are accountable and are working in the best interests of their stakeholders, not just their executives. These 3 pillars come together to create a foundation for making investments that aren't just profitable, but responsible and impactful. The growth of sustainable investing. In the past decade, sustainable investing has moved from the fringe to the mainstream. More than $35 trillion are now invested in ESG-driven assets globally, a number that has grown at an extraordinary rate. In fact, sustainable investment has seen an increase of more than 400% since 2015. This growth isn't just driven by investors wanting to be socially conscious. Studies show that companies with strong ESG profiles tend to perform better in the long run. In fact, research shows that companies that focus on sustainability, innovation, and ethical governance often outperform their less conscious counterparts, especially during times of economic uncertainty. This is a major shift in how people view their investments. It's no longer just about the numbers, it's about aligning your portfolio with your values. Why does sustainable investing matter? The importance of sustainable investing goes beyond simply doing good. It's about creating a future where business and environmental responsibility are integrated, ensuring that we leave a better world for future generations. Here are a few reasons why it matters. Environmental impact. With global issues like climate change, pollution, and resource depletion, sustainable investing allows you to fund solutions to some of the world's most pressing environmental problems. Companies that prioritize renewable energy, sustainable agriculture, and clean technologies are helping shape a greener, more resilient future. Social responsibility. Our world is changing, and social responsibility is now at the forefront of business decisions. From improving workplace diversity to ensuring fair wages, sustainable investing helps fund businesses that are striving to make a positive impact on society. This can lead to healthier communities, better standards of living, and greater equality. Long-term financial gains. Sustainable companies are more likely to thrive in the long term. They are better equipped to manage risks, adapt to changing regulations, and capitalize on new market trends, such as clean energy and technology innovation. This means that sustainable investments not only contribute to a better world, They can also lead to greater financial returns for investors over time. Risk reduction. Traditional investing often overlooks non-financial risks, such as environmental disasters, social unrest, and governance failures. Sustainable investing helps reduce exposure to these risks by focusing on companies that are proactive in mitigating such challenges. Understand your values. To help you begin, understand your values. Sustainable investing is all about aligning your portfolio with your personal values. Start by asking yourself, what issues matter most to you? Do you want to support companies that focus on fighting climate change? Or are you more interested in companies that prioritize social justice and equity? Identifying your values will help you find the right sustainable investment opportunities. Research ESG criteria. Once you've defined your values, you'll need to familiarize yourself with ESG criteria. ESG ratings assess companies based on their environmental, social, and governance practices. Many financial institutions and research firms offer ESG scores to help investors choose which companies meet their standards. Start small and diversify. Like with any investment strategy, it's important to start small and diversify. Look for sustainable mutual funds or exchange-traded funds, ETFs, that already have a diverse range of companies in their portfolios. This can give you exposure to sustainable investments without taking on too much risk. Invest in green bonds. Green bonds are a popular option for those looking to support environmentally friendly projects. These bonds are issued by governments or corporations to fund projects like renewable energy infrastructure, energy efficiency upgrades, and sustainable agriculture. They offer fixed returns while contributing to environmental sustainability. Consider impact investing. Impact investing goes beyond traditional sustainable investing by focusing on companies or projects that generate a positive, measurable impact. This could include investments in social enterprises or initiatives that tackle specific issues such as affordable housing, education, or healthcare. Monitor and review your portfolio. Sustainable investing is not a set-it-and-forget-it strategy. It's important to regularly review your portfolio to ensure it continues to align with your values and goals. Look out for any changes in a company's ESG performance and adjust your investments accordingly. The future of sustainable investing. The future of sustainable investing looks incredibly bright. As global awareness of environmental, social, and governance issues continues to grow, more investors are seeking opportunities to make a positive impact. In fact, ESG investing is expected to continue its rapid growth, with experts predicting that sustainable investments will make up half of all global assets under management by the year 2030. Governments, businesses, and individuals are all recognizing the importance of sustainability, and this shift will likely lead to greater innovation, transparency, and accountability. As the financial industry adapts to these new realities, investors can expect more opportunities to invest in companies that are not only financially successful, but also committed to creating a better world. Conclusion: your money, your purpose. Sustainable investing isn't just about growing your wealth, it's about making sure your money serves a greater purpose. By aligning your investments with your values, you can contribute to a future that is not only financially prosperous, but also socially and environmentally responsible. So, whether you're concerned about climate change, social justice, or ethical governance, sustainable investing offers a way to put your money to work for both you and the world around you. If you found this video helpful, make sure to like, subscribe, and hit the notification bell to stay updated on all things sustainable investing. It's time to make your money count, because with sustainable investing, your money can change the world.